And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Thursday, March the 30th. Tomorrow's the last day of the quarter already. My name is John Hoagland. Thanks for trusting me with your time this morning as we always seek accurate context, good risk management, and just remain patient in our trading. We had some economic numbers this morning. We've been waiting all week for the GDP number, which was really just a second final of the fourth quarter of last year. We're expecting it to be at 2.7%. It came out at 2.6%. The market seemed pleased by that. Why? Well, the economy isn't growing as quickly as it was expected. So maybe that's going to take a little bit of heat off the Fed to raise rates. Who knows what all this is going to end up being in 5 weeks for the next Fed meeting. We also had jobless claims this morning. Jobless claims, the initial was 7,000 more than last week's. They were looking for 196,000, came out 198,000. Continuing jobless claims lower. They were looking for 1,697,000, came out 1,689,000. What all that means, we'll find out in the markets. We also have at 9:30 the natural gas numbers due out, and natural gas is just continuing to run its little bear market, just continuing to grind lower and lower. We'll see what the nat gas numbers come out today. There's also a bunch of talking Feds. At 11:45 Central, Collins is going to be speaking, as well as Barkin will be barking. Cash carry is going to carry the cash at noon Central Time, and Yellen will be yelling at 2:45. Yellen has already been yelling this morning, stating that bank rules have become too loose. You think maybe? Well, U.S. stock indices like what they've seen so far this morning. They're ready to open higher. And also, it's apparently the White House has some new plans on new rules for some of the mid-sized banks out there. Crude prices have been holding an important level after yesterday's drop in crude stocks. There's also an expectation in next week's OPEC meeting that they will not be changing their output at all. So that is also something that is on the mind of crude traders as we continue through our journey as traders. Make sure, again, that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. We do have Jared Tendler today. Make sure you are registered and you join and you bring your questions. We always look forward to seeing Jared here. And once a month we have him, so make sure you take advantage of the opportunity to talk to Jared Tendler. He's the author of The Mental Game of Trading, a very good book, very actionable book. There's some really good actionable items in that book to help you get your head straight when it comes to trading. VIX this morning, last I looked, back down below 20, right at 19. Dollar index also lower. Some hot inflation numbers came out in Germany this morning. The euro is higher. The dollar is a little bit lower, 102.28. And the yield on the 10-year up slightly this morning at 3.59 when it was 3.58 the same time yesterday. No major changes in rates as far as the 10-year is concerned. So always looking forward to Thursdays. I'm always looking forward to every trading day. I feel I'm very lucky to be in the markets and here with all of you every day. So I do enjoy this very much. The Tendler video will be on YouTube later on. Yes, of course. All right. So interesting trading day yesterday. Interesting make hog money yesterday. I think people thought I was a little bit crazy. I just kind of took charge and put a trade on, and we were buying it at a very bad trade location. But because of the delta divergence yesterday, it gave me the confidence to go ahead and do that. We took 10 points on that trade late in the day, and there was a good reason for it. And when there is a good delta divergence, I'm going to be bringing it up. So just something to keep in mind. You might want to start thinking about keeping your eye on delta. I know it's not available on all platforms, which is unfortunate, and sometimes platforms do kind of represent incorrect numbers when it comes to delta. But yesterday I was very confident that we had some shorter, weaker hands traders too short coming into the close. They're the ones that have to get out of those positions by the end of the day, and we did have a pretty decent upside move at the end of the day, which was great. We have make hog money today, the early session, right after the prep here. So there's the link to register for the Zoom meeting. You will be able to watch it, however, on YouTube if you don't want to come into the Zoom meeting. Really, the only difference now, because we're polling both sides, is you're going to get about a 10-second delay, maybe a 15-second delay if you're watching it on YouTube compared to the real-time markets. So, but I do look forward to having you there. So, again, make hog money today, and the Tendler session tomorrow will be Friday. The market prep will be the only thing that we're going to be doing live. And again, we're looking forward to expanding Top Step TV a little bit here in the near future. Hopefully you're going to enjoy it, and hopefully it's going to benefit you. All right, let's see who's here, what's going on. Brian, first in the room, winning the prize. George Lacey always says good morning to you as well. Dan Trader, Timothy, Fred. GDP numbers did not create much reaction, nothing big. I mean, it was the final, it's like the third stab at getting it right for the fourth quarter of last year. Now we're going to start with the first quarter of this year with a couple of preliminary numbers, one this month, one next month, and then, of course, in June, we'll have the final then. So it's a little game that they like to play called What is the Real GDP? Joe, good morning. Urban Cowboy, Rusty Golfer, Scott Saw, and he conquered. John Pakulis, good to see you. Terry King, Stephen, Fred. Yes, the PCE comes out tomorrow with personal income and outlays. It's really going to be it for as the economic numbers this week. Will, good morning, everyone. Before this celebration turns into a hangover. Good morning, Will. Shaw, good morning. Happy Thursday to you, too. Bill Phillips, VJ. Weekends, as you say, did it again. Second consecutive gap up. Looks like we have some considerable short time frame, weaker hands longs in this market, but the activity yesterday with the delta divergence, a lot of those longs got out yesterday. We have some new longs. What are they going to do today? And I saw somebody commenting, there is a lot of cash out there looking for some place to go. And I was reading an article this morning. There are some economists that are saying that the NASDAQ has now hit bull market levels. Can you believe it? Bull market levels. I don't know if I'm down with that, but we will see. Shaw, good morning. Bill, Dr. VJ, John, good morning. Nastic, Will R. Hegel Matters, good morning. Rooster, crowing early this morning. Sarah Hall, prayers and love to you as always. Mark O, good morning. Travis, good. Bolden, Talking Feds, yep, all that today. Will R, this is the one, early equity fund manager, 40% cash, even if there's a lot of dangers ahead. Very bullish short term, since it's better to drop with all that than miss the bull train if we survive PCE, of course. Jason, good morning, my brother Rick. Hopefully you're going to be joining us for Make Hogue Money. We've got a nice little streak going, and I'm counting on all of you to keep the streak going. Ground Zero, good morning. Zareen, Anissa, good morning. Robert, Vince, my guy, good morning. Do you think having a funny name is a requirement to be the Fed governor? I know some of these some of these Fed governors, it's just too good. We've got barking, we've got cash carrying the cash, we've got yelling, and we've got Chairman Pow. Oh, how about that, huh? Yes, the Jared video will be on YouTube later for sure. Tiki cumulative delta high this morning, seems passive buyers still in the market. Yes, make sure that you change that from the overnight. You want it to reset at the open, so you get regular trading hour session delta. That's how we saw the delta divergence yesterday. Pagel, good morning. Franchino, good morning. Scott masking duct. If you can't fix it with duct tape, it ain't worth fixing. Thank you, Fred. JD, today should be a movie. Well, we'll see, huh? Really enjoyed the explanation of the delta divergence yesterday. Swede, good. Noticed after a short squeeze like that, the market will often move down quickly, right? Even before the open. Do you know why? Before the market opens in the evening or the morning? I haven't noticed myself, but when there is a delta divergence and a late spike created from that delta divergence, that gives us reference for the following morning. Now, if the late spike, if the move late in the day yesterday is a late spike, we're opening above it. That's going to increase the probability of acceptance of higher pricing and perhaps continuing to move higher. David Columbus, good morning. Shy JT, good morning. Good morning, Bluebell. Mwah! A big kiss to Bluebell. El Lobo, Pete, trading for animals. Good morning, Joy. I don't have any coupons, Joy. I'm sorry. Trading for animals, looking for a short around 40.87. That's what is that? That is, let me look here. I'm not seeing my numbers. Hang on, 40.87. 40.87. We have, where did my numbers go? We have 40.86 as 15% off the all-time high. Interesting spot there. Interesting spot. Is there a link for Tendler? Yeah, let me put that up. That's a good idea. Let me get that for you. Here is the link to register for the session with Jared Tendler today. I'm going to put that up, and it will be in the chat here. I got to move this thing. And there we go. There is the link. I do not have promo code anything for you, Joy. I apologize. Cryptocurrency, good morning. Trading Research, Edward, Besweed, market close, I mean. Oh, yeah, it really depends. You know, there are times when I've also seen late spikes after the market close at 3 o'clock. I see it continue the move to the upside. So, you know, if you do see the market go in the opposite direction after the 3 o'clock close, it's probably just saying that some of the short squeeze is over. If you noticed yesterday, I got out before the 3 o'clock close on that long. We took 10 points on it, but we got out within about 10, within a couple of ticks of the high. So you got to kind of gauge when the short squeeze may be over. And remember, these are short-term trades. If you notice an early delta divergence early in the session, it may give you the confidence to stay in that long all day long. We started noticing the divergence yesterday, and I'm going to show you where we started noticing the divergence on the charts this morning on the 30-minute chart. What was that about resetting the cumulative delta? So you can set on on Trade-Evade or TS Trader the time when the delta is going to reset to zero. Now, it's not the cumulative delta. Well, I guess it is kind of the cumulative delta. It's the Tiki cumulative delta line, not the cumulative delta on the platform itself. I'll show you where to get that, but I can't do it today because we got to get through these charts, get into make code money. And so if you can, Casey, come to group coaching next Monday, this coming Monday, and I can go through all of this and help you get your platform set up for regular trading hour sessions. Okay? All right. Yeah, all birds love kisses, don't they? I want to meet Bluebell. So the 30-minute bar, but the cumulative delta should not change according to the time frame that you're looking at it. Your delta line is showing, well, it's showing minus 24. It's showing positive 24,000 on the daily chart, but we're going to take a look here on the 30-minute chart here very shortly. Oh, that's for, Hang on. This should be the link for the Tendler session now. Let's see. Yes, this is the right link now. I apologize. So the right link is now in there. Okay. All right. So without further ado, let's jump into the charts. Got a little bit to talk about. There's nothing really that fascinating that I'm seeing, but we're going to take a look and see what kind of context we're seeing in these markets. So this is the daily in the S&Ps. We've been a little bit concerned, I think, at least I've been, because we haven't really been bringing in open interest on this move to the upside. It hasn't been new business. Yesterday, we brought in new business. The estimated increase in open interest yesterday is 27,000. So this rally has some teeth to it. It's not a hollow rally. It also increased volume a little bit in futures and a little bit in the New York Stock Exchange. So when we're looking at an auction process, we are looking at how is it doing? Well, we added a little bit of volume yesterday. We had an increase in open interest, which tells me that was more than just short covering yesterday. There was buying. There was buying coming into this market. And I'm upgrading the auction process to a B from a C from yesterday. The auction got healthier yesterday with the increase in open interest and volume on the upside move. We've already traded above the swing high, above last week's high, and we're headed possibly towards weekly kickoff high, which is 41.10. This 40.85, 40.86 red line here, again, that's 15% off the all-time high. That is a very interesting level, isn't it? So we started seeing the delta divergence relatively early in the session yesterday. I think it was in a meeting with some personal performance coaching clients, and I was actually short looking for an inventory adjustment because we had all of these longs from overnight. At one point, I said, this just isn't working. I'm a little bit nervous for shorts now. I covered my short, looked for a place to get long. So if we did that and we saw that the delta was lower all day long, so we kept going from like 12,000 negative delta, 17,000 negative delta, to coming back a little bit to more negative delta. But the increase in delta is aggressive sellers. The increase in negative delta, the decrease in value in delta, was aggressive sellers using market orders to hit the bid. Usually that's going to mean that the market is going to head lower, but when it doesn't, it gives the impression, or it gives the possibility of longer buyers, longer time frame buyers, just scooping up what they can scoop up, and then they move those bids up and they scoop up what they can scoop up. And it was at the end of the day where all of the Overnight longs got out of those longs, ended up short, and pushed price higher at the end of the day because they want to go home flat. So Delta is, because we can't see the bigger participants anymore, I used to be able to see them in the pit. We have to use tools similar to this to find opportunities for when our direct competitors, the other P shooters, shorter time frame, weaker hands traders, are too much one direction. So what I'm doing is I'm pitting time frame against time frame in order to find opportunities to take profits. We did that yesterday and make Hogue money. We closed up here. We've got overnight inventory long again. Well, do we have any bad news? No, we don't. What do the equities do when there's no bad news? They grind higher. They've been grinding higher. I think that they've held up very well, even with this whole banking thing. And now it looks like maybe we're going to be making some changes to protect the banking industry from something like that happening again. So it's all roses now, right? Well, maybe that means we're going to get a pullback. But we have overnight inventory long, gap rules. We're going to be zeroing out Delta at 8:30 here, and we'll be watching Delta. If you want to learn more about Delta, come to Make Hogue Money at 8:20 today. The link is in there. We'll see you there, and we'll see if there's any continuing divergence in Delta early in the session today. Anyways, we got longs. If we can't close the gap relatively early, we're going to be looking for opportunities to buy weakness. The weak lows that we have still remain. There was a weak low yesterday. There was a weak low the day before. A weak low the day before that. Those remain out there, and they are considered to be kind of weaknesses in structure. We've got an unfinished gap from Monday to Tuesday to Wednesday, I should say. Now we're going to have a gap from Wednesday to Thursday. All of this is weak structure, but with all that money out there, and with the accumulation of new longs yesterday, probably in longer time frame, these areas are going to become important when they become important. I don't know when that's going to happen, but I'm not going to focus on them today because the market generated information that we're seeing is saying, well, we're putting in higher highs, we're putting in higher lows. We have an increase in open interest yesterday, an increase in volume yesterday. The auction process is doing pretty well. So that open interest increase yesterday indicates new business. Take a look at the TPO chart. I mean, I could yammer on about this all day, and I don't want to do that. So here's yesterday, weak low, weak low, weak low. I mean, when we get to the bottom here, we have excess, big excess. Price got too cheap down there. Sellers wouldn't sell it anymore. Buyers came in, and by and large, buyers have been in control ever since, even with all that bad information at the time. So here we are. Look at the overnight low, right in that little hole here in the profile. How interesting is that? Well, here's where we are now. Here's the overnight high. Yesterday, normal variation trading day, somewhat extreme, but mostly just the market trying to push higher on negative delta. Buyers, longer time frame buyers. Here's crude oil now. So we're holding up above that 73 level. It's been somewhat magnetic. We've got our third day kind of stuck to it here. We added 22,000, however, in open interest yesterday. That tells me there's some naysayers here that price may not continue higher, and this is a very, very critical level. We got the weekly kickoff high, and we have this trend line here, which kind of held our trade in a triangle formation-ish. So this area right here, it's like a piece of rice between two chopsticks. It's just hanging there. And I think, again, this is a critical area. Take a look at the 30-minute chart. What are we seeing here? What is this market telling us? Well, we've got some overnight longs, but they're in range and in value. Fred, look where we are. We've got a high volume node here in the point of control, volume point of control. We've got a high volume node here as well. We've opened between them. In range, in value, patience. If we go into repair and we're in short time frame control, visual. Gives us the opportunity to be patient, gives us the opportunity to limit risk when they're approached. Okay, so I'm thinking maybe we could see a repair day because we do have a high volume node from yesterday here. We have a high volume node from yesterday here. We've opened between them. Okay. Quick look at the TPO chart. Thank you, Danielle. It's nice to see you're here. All right. So here it is. I mean, here's the volume point of control. Here's the TPO point of control. It's a map. it's showing us, well, the visuals that are closest on both sides of the market are those points of control. Be patient. Maybe there's an opportunity here, but it lets you limit risk. It can take a look here too, and again, it can help you limit risk. Repair is neither downside nor upside. It's the visual levels on either side of the market that were created by this profile from yesterday are an assumed point of control down here and an assumed point of control up here. Volume, high volume node, high volume node. So those high volume nodes are magnets for price. They're all magnets for price. So if we do move lower and check this assumed point of control down here, that gives us an opportunity. If we go up here and we test to this assumed point of control, which is a point of control, that gives us an opportunity to limit risk. Repair would mean we would trade to both. Repair means we would trade to both. It's so nice to see Danielle here. If you guys get the opportunity to meet Danielle, you are going to just absolutely adore her. She is a wonderful person. She cares so much about all of you and a little about me. Just kidding, Danielle. No, Danielle's a wonderful person. Maybe we'll get her on Top Step TV one of these days so you guys can meet one of the greatest people. All right. Here's gold. We're still coiling. Volume still coming in because of rollover. We are... Oh, I didn't do the NASDAQ. You guys are probably get mad if I don't do the NASDAQ. So NASDAQ, this swing high, weekly kickoff high, in play today. In play. Obviously. We added 7,500 in open interest yesterday, still in a range-bound area. We did not necessarily have that same delta divergence, though. So this is kind of the upper area of balance rules. We're using this level to limit risk today. There we are, right at weekly kickoff high, right at that swing high, right at last week's high, right on that area. It looks so primed for an opportunity. I bet you there's a tarpon under there somewhere. Again, overnight inventory to the long side. We've got a gap rules, of course. We know what that means. We're looking for opportunities for longs in the direction of the gap if we can't close it relatively early. It does look like we've got a whole lot of longs here, but again, yesterday in the S&Ps with that negative delta, we ended up with short time frame traders too short on this move to the upside. And again, there's a lot of money up here. There's a lot of money in here. Here's the TPO chart. Normal variation trading day. Whoops, hey there, how you doing? Normal variation trading day. We do not have the same weak lows There's excess here. There's excess here. And there's excess here in the NASDAQ that we do in the S&Ps. This little anomaly looks a little tasty. We are, again, going to be opening with a gap. Overnight high is going to be somewhat pivotal for us. Somewhat pivotal. And, all right, now let's go to gold. The gold has been relatively uninteresting, but it is going to change. It is going to change. Again, open interest, we lost 4,000 in open interest yesterday. A lot of people kind of stepping away from this. They're going to have to step back in at some point. Dollar's off a little bit this morning. Here's the 30-minute chart. Overnight inventory, maybe a little bit long. It's already been kind of reconciled. Yeah, Paige, that's one of the kind of the rules is when we open with a gap, when we can't close the gap, we look for opportunities to trade in the direction of the gap. That's to the upside or the downside if there's a gap lower. Just a basic loose rule there. All right, so, all right, gold, we're in range, we're in value. We've rejected our overnight high. Our overnight low is all the way down here. Not looking for that, but there is a naked point of control for us to see there. What I'm really kind of focusing on is off this daily chart. If we start to accept outside of this triangle, that upon acceptance outside of that, that's a go with type of situation. I'm really not going to be focusing that much on gold until I see something like that. We do have excess on the high and a poor low yesterday, a weak low. It's a normal variation trading day. I'm calling it a neutral normal variation trading day. But again, we've excess and a weak low. We've tested now in above that excess. We got a little bit of a gap here. We haven't been able to close yet. Looks like we've maybe heading towards a value area special situation play, but the range of the value area yesterday, I don't think just kind of is that attractive to try and catch that. But again, I'm probably going to be focusing on other markets today because of the situation gold is in. I'm going to keep that daily chart up, however, so I can see when price has penetrated either of these trend lines to see if it's a go or no-go situation. All right. Euro. So some hot German inflation numbers has the euro on the move to the upside. It's now trading above weekly kickoff high. This pullback is nice. This structure is good to the upside. Yesterday, we added 4,600 on a doji day, but it's an overlapping to higher day on higher volume. Makes sense that there's money coming into this market to the upside. Oh, we got the weekly kickoff in play this morning. First thing I saw was, well, now is a good time to do something. And it does look like buying it upon acceptance above that weekly kickoff level is the right thing to do. It was a gap. We were unable to close the gap. We've got price moving higher, value moving higher, important inflection level. If we maintain price up here, we can continue this move to the upside. Again, upon rejection above this level and reacceptance below weekly kickoff low, we could come back and close the gap, maybe even trade through the value area special situation, and there's gaps and points of control down below, and another gap and another point of control. There's weak structure down below this. We need this market to stay above weekly kickoff high for continuation to the upside. Here is yesterday's profile, normal variation trading day, the upper extreme of the initial balance, the high of the day, gap higher. No real good information there other than the fact that there's a lot of unfinished business down here. But again, that can all mean nothing again if we maintain and accept and hold above that weekly kickoff high. To be precise, 109.44. 109.44 is that level. And 10-year. Volatile range bound. Last week's high, last week's low. Is that right? 1, 2, 3, 4. No, this is incorrect. This is incorrect information, ladies and gentlemen. Last week's high. 1, 2, 3, 4, 5. Last week's low. I don't know how that happened. But as far as weekly kickoff levels, we're right in the middle of it. This market is waiting for new information. Is it really going to wait for new information until 5 weeks from now for the next FOMC meeting? I mean, it could. Inside extended trading hour range, in the middle of the range from yesterday, inside value. My focus, if I were going to be trading this market, would be the low and the high of the overnight session or the current session, one or the other. So in short time frame control, short time frame levels tend to hold. Here's the TPO. Normal variation, somewhat extreme trading day, week high, week low. There's so many week highs and week lows in this market. It's hard to read this market through the profiles. In range, in value, stay patient. That's the only thing I can say about this market right now. Here's the natural gas, the Widowmaker. Look at this structure. Bang, bang, bang. Down, down, down. Yesterday, the full day, the first day we've accepted below weekly kickoff low, and we added 19,000 in open interest. We're ending rollover. Volume was good. Open interest good. The downside auction still seems to be healthy in this market. What the heck is going on with this? Here's the 30. Value moving lower. First full day of acceptance below weekly kickoff low. We have opened in range and in value. We had some overnight inventory a little too short. That's been reconciled here probably before the open. So now we're ready to freewheel it here. Overnight high, overnight low look like important levels. Some of the first important levels that I'll look for opportunities. Here's the TPO chart, and we are a little bit long here in time. So normal variation trading day. Initial balance, neither the high. Yeah, it's the low. An attempt to move higher, normal variation, extreme to the upside, opening below that. Maybe some continuation to the downside. Some continuation to the downside. All right. So give me a couple of minutes here to get prepared for Make Hogue Money. I will look forward to seeing all of you there. And then, of course, we got to see you for the Jared Tendler session at 2 o'clock today. Bring your questions. You like group coaching with me, you'll love coaching with Jared Tendler. So, all right, take a deep breath. Stay humble, grateful, creative, and centered in your trading. Danielle knows if you're trying to make something beautiful on a potter's wheel, if your clay isn't centered, you're not going anywhere. If your mind isn't centered as a trader, you're not going to make anything beautiful. So stay centered today. Be kind to yourself, be kind to others. Say a prayer for peace. We'll see you in just a couple of minutes on Make Hogue Money. See you then.